Dave, how's it going, man?
Good, my friend, Mr. Will Van Wickler. How you doing today?
Good. It's good to be back. We missed last week due to some crazy weather, but we're back in full force. It's good to see you.
That is right. That is right. As everyone knows, Will, the number one STR real estate agent in New England, and myself, Dave Menapace, president of Five Star co-host, and now co-founder of Launchpad Consulting, short-term rental consulting for folks that are looking for assistance in their short-term rental game, so to speak. And we have a very special guest today. Will, want to do the introductions?
Yeah, Susan Terhune, who is now the insurance short-term rental specialist in New England. So I've known Susan for a long time. She's got a local state farm agency in Farmington, Maine, and she's an investor herself. Owns a couple short-term rentals. Owns properties in Maine, the Portland, Maine market, and also Belgrade Lakes. So she's an enthusiast in the space and also an insurance specialist. So she's actually worked with a lot of clients that have purchased homes with me and a lot of property owners that manage with Dave properly insure their homes so they are protected. So without further ado, welcome to the show.
Thank you. Thanks for having me. This is exciting. I
Yeah,
really
thanks for
appreciate
coming
it.
on.
So, one of the big reasons we wanted to have Susan on, first, she's an amazing person. So, like, we love having amazing people on. But two, we thought it was a great opportunity to share some education in the insurance space as it relates to short-term rentals. I think that a lot of people think that their only choice out there is proper insurance. And then a lot of times that even gets confused with different additional like insurance add-ons and there's a lot of either misinformation or non information. People are uneducated in the space of what insurance, like what do you need when it comes to an insurance policy for running your own vacation rental. So I think a great place for us to start, Susan, would be when somebody's bought a home, they want to run it as a short-term rental, what kind of things should they have in place, or what should they look out for in their existing policy if they want to start doing short-term rentals?
Well, I think the thing that I initially focus on is liability. For myself, it's liability and loss of income. The liability is the most important thing. And I think the risk on an insurance policy that is a homeowner's that isn't properly covering the risk is they could deny a claim. And that's a big deal. You don't want to be stuck in a situation where you're fighting with your insurance company. And my philosophy is the moment you start making money off an asset that you have, whether it's a boat or a car or your house, you've got to check with your insurance agent to make sure that you have the right coverage. And because not only if there's a loss to the property because of that, but the liability of it. If someone's injured
Right.
and you haven't notified the company that you are doing business on the premises, they can decline it. They have the right.
That makes sense. That makes sense. What just for instance, any examples you can share of this happening? Could it be like maybe a guest slipping and falling, getting into a pool or a hot tub, or like what kind of things have you come across? And then what things should someone make sure are added into their policy to properly protect them?
Well, State Farm, I think every company is different. That's the hard part. And I do think a lot of companies are kind of late to the party in terms of creating an endorsement to the homeowner policy. And so State Farm has come up with a short-term rental rider, home rental endorsement is what they call it. And it basically, the language is, is not super strong in the way that it shows its protection. But the policy, basically, when you have the endorsement, it extends coverage from the liability to the property. It also allows for, if you have a homeowner loss, you can have, we call it loss of income. Well, basically they would cover you to live somewhere else. So it's replacement if you have to continue to pay your mortgage. When it comes to a short-term rental,
Right.
that would be loss of revenues, which is a very big deal. If someone is, I know for me, I rely on those revenues for my properties in order to not only cover the mortgage, but also the improvements and, things that come up. So I want to make sure that the revenues are protected. So I think that endorsement will extend the liability and the policy provision. So if someone does have a slip and fall, but say you have a guest that, well, it could be tricky if they actually caused a fire because of something that they did. They're going to look for someone to subrogate against. And then if it's because you were making money off of it and we didn't know, then the insurance, and it's not just State Farm, they could decline the claim. So slip and falls,
Right.
making sure that you are vetting your people so that they're not, damaging, they're not, wear and tear is one thing, vandalism is another. If they vandalize it during their stay and you don't have an endorsement, it's not going to be covered.
Right. Here's a question. A lot of people turn right to proper insurance until they realize it's going to cost sometimes $3, $4, $5 a year. And it's not that proper is bad. I mean, from what it sounds like, it's fantastic. But what are some of the differences, and what options do people have? But could you just educate, the difference sort of between the endorsements and add-ons to a homeowner's policy that you're able to achieve versus proper insurance, and why might someone not necessarily want to work with proper insurance?
Well, I think we kind of need to layer that, because you have a homeowner's and then you have a business policy. And I think proper is more designed to be a business policy. So I also would do, it really depends on, we can talk about that later, but how I develop the conversation and what the goals are of the customer. So it could go either way. It could be a homeowner's or a business policy. When it comes to a business policy, which is more along the lines of proper, it's a little overwrought. If you will, it's a little layered with a whole lot of nuanced coverages that may or may not apply, but you're paying for it. And so it's sort of like, if you think about your deductible, how much risk are you willing to own yourself? And how much do you want to pass to the insurance company? I had a girlfriend who just had a flood, and she didn't have a mortgage on the house. It was a family camp, and she did not have flood insurance. And after about 30 years, she finally had a flood. And what she saved in flood insurance over the years far outweighed what she had to pay to kind of get herself back up and running. And with insurance, that's always this. I'm constantly working with budget and what kind of risk are you willing to take. And I think that my personal philosophy when it comes to a short-term rental is you have to own a certain amount of the risk. If it's a good income producing property and you're vetting your people, your risk is going to be low. If you're having a lot of losses, then you need to reevaluate kind of the perspective, because any insurance company, if you repeatedly file claims, they're going to get off you. It doesn't matter if they're charging a lot of money or not. If you're a repeat offender and you're constantly having problems, they're going to offload you, because they're going to say, we got a lot of small ones, a big one's coming. And that's just the nature of the beast. So I feel like there's a comfort in having all these nuanced coverages and the things that the insurance industry wants, the proper probably wants to give you. But the reality is it's not like a checkbook. They're not just going to write checks every time you have a problem. And so in that sense, that's where that self-insurance or taking ownership of some of your own risk, I call it opportunity, the cost of doing business. And if I lose a certain amount of money in a year and I have a budget, that's cost of doing business. And I would rather manage that through my policies and procedures on my properties than I would just giving the insurance, the money to an insurance company when you may not need all that protection or use it.
Right.
So what we've seen on our side is a lot of people maybe start with, hey, I'm going to work with proper steadily, and I'll look on their pro forma and I'll be like, they're budgeting $6,000 a year for insurance. I'm thinking, what the heck are you talking about? And I tell them, typically, here's what it is. So ship them over to you. And I first handedly seen this, and I know she did this for you, Dave, is, hey, look at what the proper insurance coverage is, and here's what I can offer. And a lot of times it's over half, as expensive working with you for the same coverage. So there's a lot of smoke and mirrors in the specialty short-term rental insurance space where, I think there's a lot of padding that goes on. I'm curious kind of what you think about, comparing coverages?
Well, I mean, I probably need to dig deeper into the proper insurance policy to really, pull out some of the heavy weighted stuff that's on there. But the reality is, insurance is actuarial. And if you don't, and the theory of insurance is you spread the risk amongst a large number of people. And that's what keeps your premiums in place. And somebody's house burns down and somebody's doesn't. And that's what helps pay for the person whose house burned down. If you're a niche marketer and you have a small book of business, you have to be high priced because you don't have the number of policies there in order to keep your rate in line. And that could be, I don't know, because I don't know how pervasive proper is or how big their financial structure is. But I think the advantage State Farm has is that it's just it's a huge company. It's solid. It knows what it's doing, and it's had 100 years to kind of figure this out. So I feel like they've got their pricing model down pretty well. But but also going back to the business versus the home, I mean, that's a whole nother layered level of conversation.
So like people that work with me, they're typically either what I call a lifestyle investor. So, hey, we're going to use the property and then rent it out. Or maybe somebody like some of Dave's clients where they're coming here and we're only going to rent this property out. How does the coverage vary? Because I hear you talking about homeowners insurance on one item. So maybe somebody's doing like a 10% down loan and we're going to rent it out a couple weeks a year, get that short-term rental rider. But then there's also, hey, what if you're buying with like an LLC or I'm only going to rent this thing out? How does the coverage kind of differ in a circumstance like that?
Well, the safest way, I mean, the safest way to do it is if somebody is just going to, I call it turn in and burn out. Like they're buying as a investment property. They just want to make as much money as they can. They're not emotionally invested in the property. They don't plan to use it. The best choice for them is the business policy. And mainly because of just the structure of it and the intent behind the investment. Then there's the layer of liability protection, and it's LLC versus personally owned. If someone has an LLC, they want to be completely protected from, they want to have that corporate veil. They want to be detached from it personally. That has to be a business policy. You can't have an entity own a homeowners. It's not the way the policy has been built over the years. And that's an industry thing. It's not a State Farm thing. It's just not designed to be owned by an entity. I think it would actuarially kind of mess with the balance. So if someone is just going to buy it as a strictly investment property or want the corporate veil protection, it's definitely a business policy.
But what's interesting is those business policies, I always think, oh gosh, business, LLC, it's going to be crazy expensive. Talking to a client of mine, I was like, oh my God, that's nothing, right? It's not even that much more.
No. Deductible, well, even the deductible, you can have a low deductible or you can have a high deductible, you can kind of vary that, and that's where you have that self risk. I encourage high deductibles, but that's just my MO. I think I would rather have the money in my pocket than give it to the insurance company and make good choices as best I can. But I think that they've figured out the model. I don't know what the Airbnb industry, because it's a motel policy, but it's not any more risk. And I actually think it's a better risk really than an actual motel. So I think that the business policy is got a lot of other, weird features to it that I think are probably more helpful for the LLC. And you can also maximize liability. You don't either, because that whole liability piece of it, which is my primary concern. And I feel like that's really the biggest risk in what we're doing here is we're exposing ourselves to unknown, an unknown factor because we don't know who the guests are. We don't know what the nuance, and living in Maine and having the weather situation, the weather, ice and snow, and people who come, maybe from warmer states that don't understand the weather. I think that, we have a lot of risk there.
Right.
Yeah.
This is really helpful learning how to unpack some of this, just because, even for me, insurance, always feels like one of those things, like I know that I have to get, so I just get it, but I've never actually taken
Mhm.
the time to understand it or see what goes into like the underwriting process. And there was a point in time where I was like, I'm gonna get proper insurance for my house in Maine, and then I realized they were gonna make me spend like 10 grand on a whole bunch of things that were totally
Yeah.
irrelevant for my property. And then we realized we literally accomplished the same thing. And I think we pay like maybe 2 grand a year through State Farm, where it would have
Mhm.
been 5 and a half. One thing that'd also be helpful to articulate for people is just sort of outside of the policies themselves, maybe we could talk about some other ways that folks could sort of protect themselves. I know for us, we have, I think it's a $5 million umbrella policy. It might be
Yeah.
more, I can't remember. Um, Maybe could you just speak a little bit quick, just share with people like what is an umbrella policy and why it might be something that folks should consider just in general as they grow their base of assets.
Yeah. I mean, I think an umbrella policy is probably the most important thing you can have in your portfolio. And it's I guess the best way to say it is why not make the insurance company pay your legal fees? Why not, for short money,
Right,
you can pass that risk
right,
and maximize, you may never have a claim, but the moment you do, or the moment you have that lawsuit sitting on your desk because somebody has sued you, to be able to give it to your insurance company and have them at least hire an attorney or provide you with an attorney and pay for it. You don't have to come up with a retainer and go find an
right,
attorney and freak out that your whole world is at risk. But my philosophy is that you should always have enough liability to protect your net worth or your future net worth. If
right.
you're in an uphill income producing situation and you're just getting your feet wet and starting to really build your wealth, you want to take that into consideration, because when people see, if they won't go after you if there's nothing to get, but if they know there's
Right.
something to get, then they're going to go after you. And if they can, and even if it's frivolous, you still have the legal fees, you still have to show up, you've got the stress about it. And most of the time an umbrella policy is short money in the scheme of things, to
Right.
protect yourself. And you can do that, and you can do that as a layer on your short-term rental. Although I'm understanding that, like in Massachusetts, if you're a Massachusetts resident, that a lot of insurance company umbrella policies will not cover a rental. So they're not blanketing over a
Yeah,
short-term rental, which
I
go ahead.
can't remember exactly how it works. So I probably wouldn't, even though I'm in Massachusetts and I should know this better. I don't know exactly, but I do know that like as we start to grow our base of assets and you know acquire more properties and have a higher net worth, when we bought our first vacation home in Cape Cod, vacation rental, I think we're at $1 million umbrella, and then we went to 5 million about a couple of years ago. Once we also started having businesses and things like that, all
Yeah.
incorporated in Massachusetts. So I think part of it was, yeah, like if we were ever sued, even if it was something not in conjunction with a vacation home or something else, we were
Yeah.
just like, we want that coverage, you want that protection. And I know that it's a popular route for folks to go, especially once they start buying homes and
Right.
growing their net worth.
Hmm.
Yeah. And I think,
I think
I'm
we
not an
got it.
attorney.
Yeah.
Oh, go ahead.
Oh no, sorry. You go.
Well, no, I was just saying that, I think everyone has kind of a different, approach in how they're doing. I don't know like how your LLCs are structured, but, some people are putting every individual property into a different LLC and maybe having a holding company, or, they'll have a couple of properties under an LLC. And then what you have is what's called a club, what's a commercial liability umbrella policy. That's just another layer on the commercial side. And if you have a business policy, so what I do with my customers on the business policy, that does not, because it's business, it doesn't go under your personal liability umbrella policy. So we just kind of
Right.
jack up the liability on that side to a comfort level. And then it's about if you have multiple properties under the same LLC. And then it's a balance of being overkill, because what is the likelihood that you're going to get sued on all 5 properties at the same time? It's
Right.
probably pretty low if you're, managing your business the right way. So that's when it gets a little tricky. But I do think that it just depends on kind of your goals and your structure, and how aggressive you're going to be in your investment plan, and just being smart about it. I mean, it's on how you structure each one of the properties.
What I'm also hearing is
Totally.
it's not a set it and forget it and just kind of slam this thing through. Like a lot of people, I always kind of beat the drum of like, let's talk about insurance, but that's not the norm in real estate transactions where people are like, usually at the end of the transaction, it's like, oh crap, I need
Yeah.
insurance. I'm going to call USAA or I'm going to call Travelers because they have my home, policy and they have my
Yeah.
car. And what you're doing with people is you're really having a consultation and digging in and actually asking questions, which you don't get online with like a Geico or anything like that. And I think the world is changing where before it was like automation and what's easy. And now for insurance, I want to know who's doing it so I can have a
Mhm.
relationship. I can talk to you and I know you know what you're talking about. And gosh, when the time comes to maybe make a claim, I know who's handling that. So I think there's a lot of value in working with somebody local who's a specialist. Maybe people who are watching this, they're not in Maine, you can't help them. But make sure the person you're working with knows what the heck they're talking about and takes the time to do that consultation, because it sounds like you're going through other people's policies that aren't even with you yet, and making recommendations about how they can improve it. And, hopefully they give you the business, but you're having that service for free.
Well, and I feel like it's kind of coming full circle, because the online world kind of turns insurance into a commodity, when the reality is it's still a very important, it's really an important part of our your individual world, whether it's your car, or your home, or your life insurance, or something like that. I mean, I think, but I do think a lot of people are flying blind, or they're doing it based on a budget. I also think that replacement costs on homes are kind of out of control right now.
They
And
are.
so a lot of people are underinsured because they, and they don't, and they're not understanding. And it may not be realistic, but the fact of the matter is a lot of contractors can charge what they want to charge. And if you're willing to pay it now, then the price is the price. It's really hard to get our arms around that. But I'm having a lot of
Or they
conversations,
haven't updated their replacement coverage in 5, 10 years.
or want to. Now we try to do
Mm.
that, and there's something embedded in State Farm. It's called PACE. It's like automatic inflation, and so the policy is going
Hmm.
up every year to kind of try to keep up with inflation. But what I'm seeing is it's still a little lacking in terms of, especially if it's a higher quality home. And that's because it's the labor cost. I mean, that's kind of an outlier right now, because, contractors and plumbers and electricians kind of can, charge what they need to charge or want to charge. And it's area specific too. So I think that's an unknown that people aren't recognizing. I do think that a lot of people who are getting into the short-term rental market and purchasing these homes are aware that that's a bigger number. But, that's that piece in terms of your own, like you were saying, you don't really know. You kind of like, and I think that's the miss when you go through a bank, is really understanding what is the rebuild, what is it going to be. And you can decide you don't want it, but at least you know what that looks like. And it's really it's shocking how high it is.
Yeah. So
Yeah,
to wrap this
totally.
up, we're running out of time. We could talk about insurance all day. I think it's fascinating and you're great. We got to have you back. What are some pretty common things that you see when we've had a lot of members of our local short term rental owners community reach out to you and you're insuring them? You took over Dave's policy, but what are some common things that you see are lacking in people's insurance policies before they come over to you and get proper coverage?
If they have a policy in place at the time, I don't think that they're taking into consideration, I mean, liability and loss of income. If it's
Hmm.
an endorsement, because there are limitations on a homeowner policy on what they'll pay for loss of income if there's an endorsement that's available through another carrier. And I think it's that they don't know what that is or what the limitation is. And I just make sure that what their revenues are going to be are covered the right way through my policy, which is kind of a little bit of a calculation. Um, And I don't think they have enough liability. That, most of them are coming in at, if it's a standard homeowner policy, they're coming in at 100 or 300,000 of liability. And it just, in today's world and with the market and the Airbnb world that's happening, it's not enough. So I would say that's the biggest thing I see.
That's good stuff. Put you on the spot there.
Yeah. I like it. Well, Susan, this was awesome. This was very informative. How can folks reach out to you, and what state or states do you represent in?
Right now I am Maine and New Hampshire, working on Vermont, if I can get that. And my email address is susan@susanterhune.com. So it's my name, susan@susanterhune.com. And then my office number, 207-778-0044.
Awesome. Well, we'll make sure to have that in the show notes when we post this to the podcast and to YouTube. And Susan, thank you for coming on today. We put you on the spot this week and kind of last minute pulled you in, but really appreciate it. And happy hosting, everyone.
Thank you.
Boom.